Electric vehicle, EV startup. Fisker Inc. finds itself in a precarious position after negotiations with a major automaker fell apart. This, coupled with the imminent delisting of its stock from the New York Stock Exchange, NYSE, paints a bleak picture for the company's future. The NYSE cited abnormally low share prices, currently hovering around 9 cents, as the reason for the planned delisting. This comes on the heels of Fisker pausing production of its Ocean electric SUV just last week, further fueling anxieties about the company's viability. The collapse talks with the unnamed automaker were seen as a lifeline for Fisker, analysts said. The company is now scrambling for alternative solutions, including potential in- or out-of-court restructuring and additional capital acquisition efforts. However, these options come with significant challenges. A potential delisting would trigger a mandatory repurchase of unsecured convertible notes due in 2026, and could also be classified as an event of default on senior secured notes maturing in 2025. Fisker has openly acknowledged its current financial constraints, stating they lack the resources to meet these obligations. This raises serious concerns about the company's ability to operate and casts a long shadow over its future. Déjà vu for Henrik Fisker? This isn't the first time Henrik Fisker, the company's namesake and visionary leader, has faced such a scenario. His previous venture, Fisker Automotive, met a similar fate during the 2008 financial crisis, despite significant government funding. The company ultimately filed for bankruptcy in 2013. Founded in 2016, Fisker Inc. initially enjoyed a promising start, going public through a merger with a special purpose acquisition company, SPAC, at a valuation of $2.9 billion. However, a confluence of factors, supply chain disruptions, production delays, and difficulties securing funding rapidly eroded investor confidence. Today, the company's market capitalization sits precariously below $100 million. Earlier reports suggested that Japanese automaker Nissan was in advanced talks to invest in Fisker. These discussions, however, seemingly fell through, leaving Fisker in a precarious position. Struggles to stay afloat. Fisker's financial woes extend beyond the collapsed deal. The company recently defaulted on an $8.4 million interest payment for convertible notes due in 2026. While they possessed the necessary liquidity, they opted to utilize the 30-day grace period to pursue further discussions with investors regarding their financial structure. This highlights the immense difficulty faced by fledgling EV startups struggling to secure funding in a competitive and economically challenging environment. Limited revenue, high competition. Unlike established players like Tesla, most EV startups lack a steady revenue stream due to slow production ramp-up and intense competition. This makes them unattractive to traditional investors, creating a vicious cycle that hinders growth and innovation. Alternative strategies and a crowded market. Fisker has opted for a distinct strategy compared to its competitors. They leverage auto supplier Magna for vehicle assembly, bypassing the significant upfront investment required to build and operate their own production facilities. Their flagship Ocean SUV directly competes with established giants like Tesla's Model Y and a growing number of entrants like the Ford Mustang Mach-E. Looking ahead, a reverse stock split and uncertain future. In a bid to comply with NYSE listing requirements, Fisker plans to propose a reverse stock split at a shareholder meeting scheduled for April 24th. However, this maneuver does little to address the company's core financial issues. Fisker's stock price has plummeted by over 90% in 2024 alone. Earlier this year, the company acknowledged the possibility of going concern, halting investments in future projects until securing a vital partnership. They also recently transitioned to a dealer partner model after delivering less than half of their targeted production volume in 2023 due to logistical hurdles. Fisker stands at a critical juncture. The collapsed deal, potential delisting, and mounting financial pressures paint a bleak picture. The company's future hinges on its ability to secure additional funding, navigate potential restructuring, and overcome fierce competition in a crowded market. Whether they can weather this storm and emerge as a viable player in the EV landscape remains to be seen.